today we'll be comparing and basically explaining the expected trajectory of where Melbourne is headed in terms of growth, rental returns, etc. Look, right now, you might already know Melbourne is already starting to take off. Most places are still on single-digit growth over the last 12 months, and we do expect it to move into double-digit growth over the next 12 months. Even the more affordable areas, the lower socio areas are being absorbed. They are growing rapidly, and we do expect it to follow Sydney's trajectory, just way behind, lagging. So we do expect a lot of the prestigious or the areas that people do want to live in to reach that $1 million mark. I mean, as an example, Fawkner in the inner north it's pretty much grown nearly $100,000 over the last 12 months. People are buying in at the 800s, but I can see that going to $1 million pretty quick. And even those, like I said, the low socio areas like Dallas and Coolaroo and Broadmeadows, I mean, they're growing pretty rapidly too. I mean, it was only just over 12 months ago that we were purchasing properties in Dallas for around 500 or below. Now most properties are high fives or low sixes. So look, it really is starting to pick up steam. But what we do expect as well is when these areas do reach that $1 million mark or $1 million plus mark, I think affordability is going to become a major consideration about which areas do grow. Because let's be honest, with the current financial situation, even they just raised interest rates at the moment. People can't really afford above 750 anymore. So we are starting to look at units and townhouses much like a normal home as possible. For example, no body corporate, street facing, hopefully having its own driveway, having a decent amount of bedrooms in there so you can actually put a family in there. And even if it is a small yard, just having a small backyard would be ideal. On a quiet street, all the other things have to be ticked as well. But yeah, like we do expect a lot of pressure over the next few years. We're just waiting for that shift when single dwellings or houses become unaffordable. We do expect those townhouses and units to really start picking up because people still want to buy homes, but they just can't afford it. And I don't think it's going to get any easier, to be honest. And unless, of course, you want to live in a new estate, then you can get something pretty decent. But from an investment perspective, it's not fantastic. You can still buy affordable things on the edge of the earth, And the other thing as well is we're also waiting for rental yields to catch up in Melbourne. I mean, it's well and truly behind WA, well and truly behind Queensland and Tasmania, and we're not necessarily seeing it pick up. As an example, right now, I'm just heading to Craigieburn. I'm inspecting a townhouse for a client that has a very restrictive brief. Ideally, it would be ideal to take them regional, but their preference is in their heart. I can't convince. I can present the data. I can tell you this is the absolute best place to invest. You'll make 10, 15K a month over the next 12 to 18 to 24 months. But at the end of the day, if they don't feel it, they don't feel it. So anyways, we're looking for a townhouse here. We found one. We're going to pick it up for 565 to 570, around there. Now, this already has a tenant in place. The rental appraisal and the rent is about $510 a week, which is decent for Melbourne, right? It's not that great, but for Melbourne, it's amazing. There's no body corporate on it. It's all the things that I said. I was talking about just before. It's street facing, has its own driveway, no body corporate. Like it's essentially a house just on a small block, right? It's a pretty good one, and to be honest, we value it at around the 610 to 620 mark, so it's got some equity in there as well. It's fantastic, I would say, and it's a 2009 build. You don't need to worry about it too much. Now, this won't grow as well as a single dwelling, but at the same time, in the same area, if you were to buy a single dwelling, you'd buy it for $750 and it would rent for high fours if you're lucky, just because it's not as new. Unless it's been renovated, then you're paying more anyway. So yeah, relative to that, it's really good. The client really likes it. But I guess I just wanted to highlight, like, even if you are buying units and townhouses here, the yields just aren't great. But the growth will be there. Maybe slightly less for a townhouse. So that's pretty much where we believe that the market is heading. we expect a lot of suburbs to become $1 million suburbs over the next few years in Melbourne, and then we expect all those the lower socio areas, the Outer Rim, Melton West, Koonjang, Dallas, Coolaroo, Broadmeadows, Frankston. I don't need to say anything. It was affordable not too long ago, but now that's all changed. And then in a few years' time, we do expect that unit or townhouse market to catch up, which you know, we're trying to catch that wave early as well. So I hope that helps. Let me know if you have any other questions, and yeah, see you on the next video.